Here in BIS Cosgrove we do a fair bit of structuring because, as I said, you need to get the structure right and then the strategy and then the product will follow. People who come in here with this retail super funds, they might be thinking about buying the building that they're working in, and there could be quite a good solution for them to buy the building. If it's appropriate, the advice could be that they set up a self-managed super fund. After we look at these funds and make sure that they don't have any life insurance or anything that's important that they keep, then we might advise that they roll over their superannuation balances into the self-managed super fund, and then the $300,000 that they have in their self-managed super fund can help them buy this building. Now, the building might be $600,000, so it's a commercial building. They can buy that, and it could also be in their family trust already, but if it's not, they'll buy that from a third party. So they obviously need an advance from the bank as well. So we've got Mr. Bank up here, and we might have CBA or one of those in the news lately. To do that, we have to help the clients, and our job is really to be the project manager to get them so that they do have ownership of that building in their own self-managed super fund. With the borrowing from the bank will go to the super fund, so they'll need 300 and with costs probably 330, and then we help the client deal with the bank, the solicitor, could be the real estate agent. So our job is to make sure all of these people, and we know they will stuff it up somewhere along the way, get it right in the end. To do that, because there's borrowing, we also have to set up another structure, another trust with a corporate or custodian trustee, and that holds the property until the debt is paid off. So the loan is to the super fund. The super fund can then complete the transaction with its own money, buy the building, and then from that time on, they're working in the building, they're paying rent to the super fund's repaying the loan to the bank. See, they're taking fees out, the funds that they're invested in, the managed funds that they're invested in are also taking fees. You get in there and you've got a fixed cost in there, like that's going to cost you $2,500 a year to keep going. But then these may have been, if they're at this level, they may have been costing you that anyway. You just didn't know. So you've got your own fund, which you're up here as trustees. So the trustees, their main job is to run the fund in the best interests of the members, which you're going to do, because they're the same people. So then you can pretty well, the super fund it's just got cash when it starts. This money's just rolled into a bank account. It can buy shares, you can buy residential property as long as you don't ever live in it. You want to buy your holiday home in the northern New South Wales. You can do all those things. And with the borrowing, which is in at the moment, and may not be in forever, you can obviously leverage up. Tax rate in here is only 15 cents, so that's what we're using, that structure. 15 cents in the dollar. So you've got 85 cents left to pay back your loan of every dollar rent you get. And that's probably just a simplified version of what we might do with some clients who come in with a problem or a wish. They want to buy a building, they have some funds, not quite sure how to structure it properly. We have the experience, we've dealt with banks. This is called a limited recourse borrowing arrangement. And we've had plenty of experience with these arrangements, fixing up the bank's mistakes, the solicitor's mistakes, the real estate agent's mistakes, and getting the client there to the end where they have this building. eventually they'll pay it off. It moves from the trust and it is owned by their super fund, and it's there for their retirement. So what was a wish and a bit of a problem at the start can be a solution, and not only a solution for the short term, but it's in their super fund for retirement, and that's probably part of their estate planning.